Good evening, everyone. I hope we have all had a pretty solid Tuesday, December 13th. We're going to be looking at what occurred today after CPI released, which caused a pretty good short covering rally in the overnight session and in the pre-market, as the overnight session was initially long above the previous day's high. You're not going to see that in this profile so far, but in the overnight session, we were pushing up pretty good um, towards the top of our daily balance. And then CPI came out, which exasperated that move to the upside, causing us to open up with a relatively large gap. First off and foremost, right now I'm currently looking at the December contract, just because that's where I have all my daily highs and stuff like that. All my destinations still marked. I haven't rolled any of these destinations over to the new contract. I'll be doing that uh, as the week goes on, and then hopefully have them all on by the end of the week. It's a lot of destinations to put in if you cannot see. So, a lot of destinations, a lot of stuff to review. Um, so I just want to go over what occurred today and then review two of my trades that I did take. One of them being a loss, and then one of them being a winner. Both were shorts. Just and I'll explain what happened with those. So CPI came out this morning, right? And a lot of people like to think that news events control the way the market moves, and in a sense, it can, or it can help exaggerate the move. But plain and simple, what occurred today is, and what you've seen today was a lack of liquidity. All right, which means there isn't a lot of inventory. There isn't a lot of free roaming inventory available. So like all this inventory was being absorbed down here, right? That's why we're in a balance. All this inventory was being absorbed um, by buyers and sellers on both sides, and sellers began to release some of their inventory at higher prices because they were no longer seeing validation for their short side thesis, which caused them to, put the market bid up and stair step this thing higher. So lack of liquidity um, is what caused the market to move as wild as it did, not because CPI inflation came out um, in a more positive tone, as I believe it was less than was expected. I believe we're down to like 7.1% year over year. But news, in my opinion, had nothing to do with this market. The market was going to do what it wanted to do, no matter what. And you can see that today. If people were truly bullish about the tone of this news event today, we would have opened up with this gap and then went trend up and had a triple distribution day up. Instead, today we opened up with a massive gap and went trend down, triple distribution down to the downside and almost filled the gap. We missed filling the gap by a tick on the new contract, and then I believe by three ticks on the older contract. But overall, right, if the news had anything to do with the way this market moved up, we would, and people were looking at that good number, that sweet, sweet good CPI number, they would have continued to buy this market up, bid this market up. We would have gotten that 12 Y POC or that 11 Y POC from the 12th of September, gotten that monthly high, and then started to look for acceptance in the single prints above, right? But that's not what happened. Another key thing that happened after we gapped above, let's see, we gapped above one daily high, two daily highs, three daily highs, almost a fourth. We opened up above three daily highs and I believe two weekly highs. We got right up to our weekly balance high. Also, um, we got right up to our weekly balance high and did not take it out. It was defended the first time by anybody that was looking to take profits up here if they were getting long near our balance low. They were looking to take profits at the top here, which caused supply to step in, as well as anybody that wanted to short this thing at the weekly balance high to see if we would roll over, right? Uh, so that's kind of a, and I'll show you that on the larger time frames whenever we get there. Um, but the news does not make the market. The market makes the news, right? As my good friend and mentor Paul would say. Um, so that's what occurred today, right? We took out all these destinations to the upside, just pure based off of lack of liquidity and the market wanting to go up. Momentum buyers and short covering pushed this thing up early on, and then all the weak longs began to get out, and shorts began to pile on, which pushed this thing back down. Uh, Now we're going to go look over at the uh, March contract, and I'll show you, and it's going to look a little bit cleaner because I don't have everything, and I'm going to try to make this as understandable as I possibly can. So let's review, right? Let's go over exactly what occurred. So in A period, hopefully this is large enough for everybody to see on the screen. We'll make it a little bit bigger. So in A period, we opened up with a relatively large gap. Now the numbers on the March contract are going to be slightly different from the numbers on the December contract, but no, it's basically all the same levels, just different numbers. So, or a different premium, I should say, baked into that contract. We opened today at 41.40, massive gap above the previous day's high. Previous day's high was at 40.26, right? Massive gap. Massive gap. 41.40. Like, massive gap, right? Uh, so initially, people that were thinking this thing's going to gap and go were probably buying up here, thinking this thing's going to go up even further off of good news. If you can't see me right now, but I'm air quoting. But that's what was happening in A period. We opened up, we chopped around a good portion, pulled back, kept getting bid back up, and we couldn't really get above the opening. Then in B period, we opened up, had a pretty small move up. Honestly, you could probably call this a highest accepted price. I'm not. You might be able to call it a highest accepted price, but um, I guess you could with the volatility and the range that we had today. You could say this is the highest accepted price, and all that means is it's basically where one auction began and or one auction ended and another began. Same thing with like excess. So we pushed up and the auction to the upside ended and we immediately rolled over like B period opened up at 41.31. We pushed up to 41.33. So 2 points, and boom, we backed off pretty heavy as we took out A period's low and began to sell off pretty heavily. As anybody that was getting long in A period near the lows were probably stopped out of their position at this point. You know, if they were, selling their position at this point, and we began to one time frame down. Anybody that was long from, like I said, the accumulation down at the lows that was selling up here began to take their profits even more so once that supply began to step in. That supply, we took out that previous 30-minute time frame in A period. That supply created what we say in the profile world single prints, intraday gap, uh, resistance, sellers in this area, right? Because think about it. People were buying here against A period's low. B period took it out. So if anybody that's smart, they're going to take their loss here. So that which in turn causes the market to sell off. And then people are probably trying to buy in this area, but there's so much supply, price keeps getting moved lower and lower and lower and lower. And then in C period, when we opened up, initially single prints had started at 40.92, but C pushed up with a little bit of demand and took back some of that single print, filled in some of that supply with some demand, but supply still was strong from all the longs that were trapped up here, and anybody wanting to get out at a higher price. Um, they protected this set of single prints, so supply was in this area. We rolled over and we continued a one time frame down. We took out B's low, which is also our initial balance low. Took it out pretty big uh, for us, and then you can see here in D period, we never did take out C's low, we never did take out C's high, but on pushes up, you know the trade is to the downside because we're one time framing down, which means we're taking out previous time frames lows, right? So B took out A's low, C took out B's low, so you could take the short thinking D will take out C's low, but it didn't. But on pushes up, you could have taken the short against the single prints, had your out at the single print fill. E period, we took out D's high, we had a reversal bar, took out D period's high. This just puts the market into somewhat of a balance initially. Um, we don't really stop the one time framing down. You would have had to have F take out E's high to stop the one time framing down. So technically the market's still one time framing down, even though we took out D period's high. E couldn't get into the set of single prints at showing that there's still supply, still uh, sellers in this region here, right? We never could get up to that high. You take the short here, um, anywhere near that 40, 98, 50 level, you're out 41.25 or above, and you're looking to rotate from 40, 95, 50 back down to C's low at 40.73. So relatively good risk reward, right? Or, a new low on the day is maybe what you're looking for. And if you were like myself, who was looking for the single prints to fill because sellers were, or not single prints to fill, but for the gap to fill because sellers were in control at this point. They're one time framing down. They have the initial balance high, or initial balance low, excuse me. They've created a set of single prints. Um, only thing buyers had was a gap in higher value. So not a lot for anybody that was wanting to buy to lean on. Sellers had a lot to lean on, so that was why you lean more towards the short side. So you sell, you're maybe looking for the uh, low of day break. Sellers began to pile on, and you look to come down and fill the gap, right? Well, we didn't necessarily do that right away. E period, we did push down pretty heavy, so we did have some liquidation. Anybody that was buying here in D period, right? Once we broke D and C's low, they began to stop out of their long positions, which caused more supply. Uh, More sellers stepped in, which caused another set of single prints. So we have what you would say a triple distribution day, where you have distribution or inventory that was up here at A's high at 41.41 to A's low at 41.11.25, right? In this range, you have inventory within this price range. It got auctioned off to a lower inventory destination, right? Inventory is now here, where it's accumulated for a small minute, uh, 1 or 2 time frames. Uh, so we have price being distributed in this area with some volume, and then we auctioned off even lower, and we have a set of single prints that held, and we began to have another distribution. We had tried to have another set of single prints in F period. We did hold them initially in G period. So after E created this small set, not a very large set, decent size though, here in E period, right? We had some supply. F period opened up, we pushed up. There was supply overhead, not enough demand to fill that supply. So we roll over We take out E periods low, which then, continues the one time frame down. Sellers are piling on, algorithms, weak longs, anybody that was still trying to buy this thing thinking that we're going to hold the gap. I guarantee you there was a lot of people today that was just buying every dip thinking this thing's going to rotate back up, when in reality, that's not the case. Market generated information was to the downside. Then F takes out E periods low. We flush out even harder. We create a initial set of single prints here in F period. So if I just show you F to G period, you're only going to see like this gap, right? And then same thing here for E period. You're only going to see where this price was traded for one time frame. That's all that single prints is. Price was traded here in B period for one time frame, and we never seen it again. Price was traded here only one time in E period, never seen again. And then once again in F period, price was traded only once in this range, never seen again, as G period held that set of single prints, even though it was started at 38.25 and pushed up to 44.50. You still had a large set to lean on. Take a short anywhere you're comfortable with. You take the short, your out is where the single prints fill. Take the short to roll over and potentially fill the gap and continue to one time frame down. So G period pushes down, takes out F's low. We begin the one time frame down even more. We fell to get that previous day's high and fill the gap. We missed it by one tick. Previous day's high was 40.26. Today's low was 40.26.25. We missed it by one tick or 0.25, however you want to look at it. Then after failing to fill the gap, sellers that were their target was met down here began to create some type of demand, which means they were just buying back the shares that they sold. Same thing, longs were looking to get into the market as we nearly filled the gap, and and their out would have been anywhere accepted inside of previous day's range, right? So you take anybody that was looking to get out of their short was creating demand, and anybody that was looking to get long at that gap fill was creating a demand. That demand was strong enough to push up, take out G's high, fill that set of single prints. So supply dried up, fill this set of single prints, and then after that, basically chopped around for the remainder of the day. So H pushes up, we stop the one time framing down in in H, or excuse me, in I period, we stopped one time framing down as we took out H's high. We never did get back to the lows or take out the low. J period, chopped around. K period, we pushed up, but you can see there's still decent amount of supply overhead because K never took out F's high. Never got into the set of single prints. Price is still untraded here since E period. Then we back off pretty good from K. That was a great short opportunity for anybody that is looking to learn how to trade better. Great short opportunity here, right? You take a short against the single prints at 40.68.75, right? Everything is still in the seller's favors. Your out is at 40.73, so you're not risking too much. And you're maybe looking, because we were at the time, 1, 2, 3, 4, 5. We were 5 wide, point of control here. You maybe could have targeted coming back into this range where high volume was at. So you're getting short 40.68. Your target is 40.56 to 40.55. 10-point trade, right? 12-point trade to the downside. And maybe if you're not given any reason to get out of the trade, you look for what happened in L period, which was a pretty good break. And you get out at 40.34. Really great trade, 30 points, right, to the downside. 34 points to the downside. Just depends on how your risk is, how you manage your trades, things of that nature. But great short opportunity in K period. Sad I wasn't around to take that trade. and then in M period, we just kind of chopped around. So only trade I would have taken later in the day would have been in K period against the set of single prints. However, I did trade. I took a short in in E period on after we had pushed down initially and then came back up. I got short where I was comfortable. In one of my accounts, I started shorting around 61 and 60 because I was thinking there was good chance we would roll over before F period opened up. We would roll over and maybe create new lows. We never did, as we battled 60 and 61 for a while in E period. F period opens up, we push up a little bit higher, and get out of my position. There was nothing that told me to get out of my position other than the fact that I wanted to protect the capital, and um, I was really just worried about that P&L, right? P&L was something I was worried about. I was thinking about the money. I wasn't thinking about the trade. The trade was still valid because we had not yet filled this set of single prints. However, after I got out of that trade, I looked for the next one, right? After I got out, I stopped out around 64, 65s. We continued to push up a little bit. I got into my other account, my other shorting account, looked in it, uh, took a, I'd been trading pretty decent size, more comfortably with the MES, so I decided to take a one lot, or a two lot of ES minis, and that's what I did here in F period. As we pushed up, I took a one lot at 66, and then another one at around 67, 68, I believe. Um, and my out was 73, so I was risking a bit, but I wasn't concerned about the money. I think if I would have taken the loss on this trade, it would have been around a $1,200 loss, but I was not concerned about that at all. Um, Actually, no, I think I may have. No, I had a two, two. Yeah, I had two lot on. Excuse me. I was thinking about the other trade. I had two lot on. I was short 60s, and then 64s, and then I added again at 68. So my loss would have been around $1,200 at 73 if we had filled the single prints, and that's where I had my out. I actually had my stop above 73.50, and then we began to roll over. I had a target set for one of my contracts at break even, and then the other two set for 53.75, which was that low. And then I had one that was a little bit lower. I had it around 47s is where I was looking to get out of the next trade. But once we got down to the low, I seen we were kind of finding a little bit of a bid. I should have been more patient, but I wanted to take the profit, so I cut myself short. Uh, cut myself real short. There's nothing that told me to get out of the trade other than me looking at P&L, seeing that I was up a good amount. I believe 400 something dollars. Within a 2 minute period, I was like, okay, I'll take that. Can't complain. But had I been more patient, the reward would have been significantly more. So I should have been more systematic about it and let this thing roll over. Because in G period, even there was no reason for me to get out. The only time to get out of the short was here in H period when G took out or when H took out G's high. I would have been paid really well. My initial position with the MES on the first account, when I was shorting here at 60s, I had bids placed lower at around 40s. I had another one around that I was wanting to bid around 34s, and then I had another one that I wanted to bid around 27, because I was going to take them off in troves of two because I had a six lot on. Troves of two is what I wanted to take it off at, and yeah, I would have gotten paid really well, even on a mini or on a micro contract. Would have got paid really well, but because I allowed P&L and that solely to kind of control my thought process, not the market generated information, it caused me to take a small loss. I believe I took an $80 loss, so net today was like 300 something. Took an $80 loss on that trade because I got out pretty relatively quickly in F period, and then yeah. That was the day right there, right? So we missed filling the gap. We have a triple distribution day. Pretty wacky day. Let's put, I know this video is long. I do appreciate it if you are sticking around. If you aren't, uh, it's their loss. But let's put in our destinations. All right. We have today's high at 41.41, excuse me. And then we'll go over the larger time frames. High of day. I'm gonna go ahead and get rid of all these because I don't like you looking at it. This is where our single prints, our initial set of single prints would fill. Single prints fill there. Single prints start here at 98.50. They get filled at 41.11.25. Single prints start. So hopefully you guys understand a little bit more about my terminology in the sense of single prints. All it is just an area where supply and or demand, because if this was reversed and going the up to the upside, it would be in a demand area. But because today we sold off, it is supply in these areas. Single prints fill, or they start at 68.75 and get filled at 73 for this next set. Single print fill. Single print start. We ended today at 1, 2, 3, 4, 5, 6, 7, 8. 8 wide, nothing to ignore, but I'm not going to mark it because it's not that significant. Um, but we'll keep that point of control in mind moving forward. Today's low 26.25, low of day. And then our gap fill at 26. Gap fill at 26. We held it by one tick. So this is what our chart looks like now. Triple distribution day. Upper distribution, A's high to A's low, 41.41 to 41.11.25. Middle distribution from C's high to C's low at 40.98.50 to 40.73. Lower distribution from F's high to G's low at 40.68.75 to 40.26.25. For the upside destination, since M period closed near the lows, upside destination is a single prints where they start 68.75, get filled at 40.73. Next destination, if we were to find acceptance into the next distribution, next destination would be 40.98.50 to 41.11.25. If we have enough demand, those single prints fill. We look to find acceptance in this upper distribution and then go and trade at 41.41, today's high. For the downside, if there's still supply in the market, then we should look to fill this gap and take out the low day at 40.26.25, fill the gap at 40.26. After that, we have single prints from the previous day that start at 40.15, get filled at 4,475. After that set of single prints, we have where they start at 4,325 and get filled at 4,098, or not 4,000, 39.9850 in that area. So if the market opens up inside this lower distribution and there is not enough supply to take out today's low and uh, fill this gap, then you look for us to come above this distribution and find acceptance into the middle and then into the upper. If we open up tomorrow inside the lower distribution, then you look to take out today's low, fill the gap, and then maybe get back inside of our previous day or into the range. Like I said, this is going to be a long video. Hopefully you're sticking around. A lot of information. A lot of information in here. And then we're going to look at the TOS continuous contract. Let's go over we're just going to review the weekly, monthly, still in a balance. Let me make sure I turn off the extended. All right. So we took out our balance high, right? I was talking about this balance high. Did I do that? Hold on. Sorry, guys. Futures. Huh. Well, we took out our weekly balance high on the continuous contract. Like I said, these numbers are going to be a little bit different. 41.41 was today's high, yeah. Okay, so we took out the weekly balance high, but only stretched it, in my opinion, since we closed back inside. If tomorrow we get back up there, then the weekly will look to turn from balance to up. Daily is currently up. Daily is currently up after opening up and coming back. That's an ugly candle, an outside candle or handle there. It's not very good looking. But the daily went from being in a balance. We took out our balance high at 41.10, right up here. 41.10. We took out that balance high and began to try to find acceptance up here, but we rejected pretty heavily. Closed back inside that balance. So tomorrow, that's what we're going to be looking to do. We're going to look to continue the one time frame up, take back some of this trend day. If we fell and there is more supply, then you look for this market to roll over. As Wednesday, we do have the Fed coming out. Holy cow, this was a long video. Thanks for sticking out to the end. Hope you all have a wonderful day. We'll catch you in the next one. See you.